Hey guys, it's Willie from SuertePanda.com. Welcome back. So today I just want to go over real quick some of my favorite Tastytrade and Tastyworks trading rules. I guess especially with like the big changes in implied volatility. I'll kind of show you what I had like kind of before, and then like what I'm kind of doing to adjust to like the lower implied volatility environment. So I hope this is helpful, and I'll see you in the video. Hey guys, welcome back to my platform on Tastyworks. So I just want to give you maybe like just like two simple examples of like something that has like high implied volatility rank and also one with like low implied volatility rank, and how like a credit to buying power reduction percentage might be able to help you out, some of you guys out, especially with like we're in a period of like contracting volatility, so it's a little rough to find like good trades right now. Um, so like a like a while back, I put on like this snap trade because I thought like, oh, it could be a good maybe like a potential good tech rebound trade, and then it also happens to have a pretty decent like implied volatility rank, and I want to show you kind of like what the thought process was for putting on this particular trade. At the time, like it had around like 45 days to expiration, and that's like one of the good tasty trade rules that I like to follow, where I want to try to sell premium in like the 45 uh day like window. You could probably go out also to like the 60 day-ish window for like some underlyings that have like, kind of lower implied volatility that you want. This way, like, the trade-off is that you have to spend more time in the trade, but at least you get a little bit more credit. So that's one thing to do. Or you could switch to something where you can kind of swap around some strategies. Um, and generally, like the tasty trade rules are that like some people like to sell somewhere in between like the 16 and 30 uh, delta strike to collect enough like decent credit. So right now, again, this is not financial advice. This is just something that I've already done or about to do. And if if this helps you, you can place whatever trades that you want. I'm not a financial advisor. This is just what I'm doing. And I always say that it's your money and it's your responsibility. But I think this could be helpful for some people. I don't want to be accused of like being a shill or just like overly promotional or anything like that. So it's like something like Snap I think is good because it has like a lot of volume. So you know a small timer like me is not gonna really move markets. So um, it's just like the usual legal disclaimer stuff. But I want to show you what uh, because I think most people that watch teach trade like they kind of know the I guess like most of their like the trading rules. But I think a good one, and recently Julia from the research team, she also had like a pretty good research slides regarding like credit to buying power reduction, and this was actually something that I've been looking at like for a while now, and I'm glad they kind of brought it back up again, so that especially with like low implied volatility, you want to have like a good way to kind of rank your trades, like maybe like just across the board. So I kind of want to show you what it looks like, and like for example, if you wanted to put like something similar, like if you also want to sell like maybe like the 53 puts. So right now, if you could see like down near like the bottom over here, like potentially you could collect around like $247. And then if you look over here, like where it says BP effect, um, that's like the buying power effect. So this is how much they will take out of your account to kind of like hold like money to set aside in case like your trade goes kablooey. At least like the broker's just gonna wanna protect themselves somehow. So this is kind of like in a way, like in the previous videos, like how like this is on portfolio margins. So like most people, I guess like your max loss um over here is this is like 5,053, and the reason for that is like you're like the like technically let's say like Snap goes out of business, right? So then like you would lose like the 53 strikes multiplied by 100, so that's like $5,300. But you're collecting 247, so it's really 53 minus 247, and that's where you get like the max loss. And I think for like most traders where like they don't have like a any type of margin, this is what you kind of like use to kind of like ballpark your trades, like kind of like how much like what like this is like your worst case scenario basically. But like the chances of like Snap just like suddenly going out of business, it's small. I mean it's there, but I like for the amount of time that I'm holding like this particular trade and like within 41 days, and it's not even 41 days because I expect that within 21 days I'm gonna close this out for like roughly half, so maybe like $100, 120, you know, 20, 122, $123. I would just like close this out for a profit, hopefully. But the interesting thing is like, um, let's just do like the math on like a spreadsheet somewhere. So like I'm collecting $247, but I only have to put up because I have a portfolio margin. I only have to put up $483. So let me switch to a spreadsheet real quick, and hopefully you guys can see it too. Um, let me just like pull up the spreadsheet. So hopefully this isn't like too big because like on my screen it looks like really kind of goofy, but maybe on like YouTube it'll look like pretty decent size. So hope that helps. So let me just do uh, so I'm collecting $247, and what was it again? It was 480. Well, let's just make it 484. So if I take this divided by, I mean that's 51%, which I think is a pretty good return. If you decide to take it all the way out to like exploration, but that's not what I normally do. Like normally this will probably be cut in half. So because I want to just to increase my probability. So 25%, like 25.5% for like 20 days worth is it's pretty good, at least to me. uh and if you can consistently do that for I mean this is a really ugly calculation, but let's just say like over the course of the year, if I can do 24, if I can do this like 15 times a year. Again, this is like a really ugly way to do it, but like I'm basically trying to annualize like the performance. That's like 388%. But, realistically speaking, like the chances of me finding this type of trade like consistently and doing across like my entire portfolio is not realistic. You also have to budget for losses, and then again, like because like we're in a contracting like volatility, I don't expect like these type of trades to like last very long. So and that's just like one of the challenges of options trading. Like if this is like 2017 again, like we have like really low implied volatility, making these type of returns is gonna be like really tough. And this is just like me extrapolating. Um, this again, this doesn't take into account like bad trades or it's just like it might take like a longer time than you think to collect like like 50%. So that's just something to keep in mind. I always want to try to tell you like stuff that's like a little bit more realistic, or like what you can
finding the markets. So let's flip over to the other side where it's like more uh like like I would say like more pessimistic, where like there's like good companies, but you know the like the the credit's just like pretty weak. So let's flip over to like over to the flip side. Um, I'm not even gonna look at like the ones on the bottom. If you see on the left hand side, like the Tastyworks, like the watch list. Some of the trades I had on like before, like OIH, SPX, and RUT, like they're actually technically this is just like a technicality. It's not really negative implied volatility rank. It's basically like the way it works is it compares it over like a 1 year time frame. So that's why it looks like really goofy. Like because like the implied volatility was so high in the in March 2020 that like it's really messing up like the implied volatility rank. It's like we're on the flip side where like right now like we're it's so low. So let's take a look at DLR. Like if you don't know what they do, like they basically like they're sort of like a real estate investment trust, but for like I believe like servers and like where big like tech companies like they started their data. So it's pretty interesting business, but again, right now like the implied volatility rank is so low, so like you're not really getting like a decent like discount on the price, and that's the whole reason why I like to sell cash secured puts is that like I want to get in at at a lower price and I want to collect like some premium. But right now, if you look at it, like let's say if I wanted to place this trade and I'm a little hesitant to do so because I'm only collecting $180. But this time, on for a portfolio margin, like I have to put up $1,684 to do this trade. So let me just go back to the spreadsheet real quick. So so 180 over 1684. Let's just do that. Oops, sorry about that. So as you can see, like it's only like a little less than like 11%. Like if you want to carry it all the way to expiration, but per TC True rules and mechanics, realistically, you'll have to cut it in half. So that's only like 5% within like a 20-day, a little bit over like 20 days. So like if I sell it at like around the 45-day mark and I take it off at like around 21 21, 22, it's only 5%. And again, I guess if you wanted to annualize it, um, you know, I know it sounds weird, like it's like a high class problem. It's like, you know, 81%. But again, um, this doesn't take into account like any losses that you might experience along the way, especially because I know like some people also they just have just like outright stock, and then they also have like maybe like uh long delta trades because like the implied volatility is so low that some people they don't even bother with cash secured puts. So like I guess like on the other end of the extreme, if you wanted to do a technically similar trade, what you could do, again, this is not financial advice. I'm just giving like just general. Um, well, I don't mean this as like a as like a pun or like a joke or anything. Like you could just do like a. I'm trying to just give people more options. What the heck am I doing here? I want to do a spread. Like so basically like a long call vertical where um I think in the past like the guys like the Tastytrade guys like they why am I not able to? So basically, I want to do something like this where I'm like where I have one like the long option like just like slightly in the money, and then like the short option like slightly out of the money. So like the in the money one is like 145 like strike for this particular trade, and then also the short strike is 155. Technically, you could adjust like the strikes however you want. Uh, this will probably give me close to like maybe like a is that right? Like 100. Like basically, I want to look for like a 50-50 shot. So let's just do the math. I'm trying to do the math in my head. I think this will work out. Where like you're paying like $380, right? And the most you can hope to make is like the difference between 145 and 155. So that's like $10. Um, at least for like this particular trade. So it works out a little bit better than a 50-50 shot. But again, you can slide like you can play around with this, like however you want. Like some people might want to do this like slightly out of the money. But again, like I guess like sometimes I'm a little bit more cautious because like especially right now, like the market's like at basically all-time highs, and I kind of want to give myself like some breathing room in case like the market tanks suddenly. Um, so again, I just want to kind of want to like just to show you like it's kind of interesting how this works. Like I'm paying out $380, and like the buying power effect is like as you would expect. You know, like the max loss is I'm only losing out $380, and they gave me like a slight kind of like a small break. Instead of putting up $380, I'm putting up $377.25, which isn't like a big discount or anything. It's just it's kind of funny. So like I guess like it kind of just shows you like the buying power reduction on a portfolio margin account. I guess it works out a lot better for if you're doing short premium. Because like when you're doing a defined risk long premium, like you're already you already defined your risk, so like there's really not much more like the brokerage can give you in terms of like kind of like a discount or like a break on like your trading costs. So I think it's just good to kind of give you guys like different ways to kind of express like your like what you think like the speculation is. So hopefully you guys found this helpful. You know, if you did, like, please consider giving it a like and subscribing. Because I think I want to. I guess it's not even for me. I guess this is more for like I want more people to learn. Just like more like proper trading techniques rather than like sometimes like I feel like right now and this is just not to just like bash anybody. I think like sometimes like I don't want like the markets to feel like a casino or like a video game. Like I think I want people to actually be more like serious in terms of like making money for yourself like through the markets and like just like providing for yourself and like saving up for retirement and things like that. Like sometimes I feel like there's too much um uh like like it's too much like excitement in a bad way. But I want you to guys to like be more like a little bit more realistic at like to you can expect to make. But again, this isn't like financial advice or anything. This is just like a person just trying to help other people. I guess like trade more responsibly, so that you can survive and thrive in the future. So anyway, I'll just like leave it at that, and I hope you have a great one and like a good trading day. So yeah, so I just want to kind of show you one last time what I was looking at um, on my Tastyworks platform. So like on DLR, it was like if you wanted to do a long call spread, like it's $380 versus a buying power effect of 377. And I hope that when you play around with the numbers, like it'll make more sense like if you see it enough, and then like if you put on like smaller trades, I think it'll help you guys. So yeah, so let me know, guys. Let me know if you what type of other content do you want to see. I'll do my best to do it for you. All right, see you.